You will regret putting money into your Roth IRA, your 401k, and any other tax-advantaged account. Because the 401k, the IRA, the HSA, they're all used to enslave you to an employer because they lock away your money until you are 59 and a half. You need to avoid those accounts at all costs. Keep all your money in a taxable account so you don't get stuck as a slave to your W-2 job forever. I'm halfway serious about this. So I just wanted to put out there that I am partially starting to regret putting a lot of money into my tax advantage accounts. And while I believe you should do this, you should max your tax advantage accounts, you should only do so if you have accepted that you are never going to be an entrepreneur and you just want to work a W-2 job and you plan to work until at least 59 and a half. If you don't want to do any of those, if you want to have a different life path, if you want to seek financial and employment freedom, you need to actually stay away from these accounts, or at least not put in as much as you possibly can, and you should prioritize other investments. So for my working life, ever since I started investing in early 2012, somewhere around early 2012 is when I started investing. And I put basically all of my money in the 401k. That's all I did. I had I had a little bit of taxable investments and a regular brokerage account, but the vast majority of my money was being funneled into tax advantage accounts. And the problem with tax advantage accounts is that they are designed to be long-term investments and they penalize you. They actually hurt you. They take your money and they generate adverse tax consequences if you take money out before 59 and a half. It's actually kind of bad in some aspects. But at the time when I was younger, in my early 20s, I wasn't thinking about self-employment. It wasn't even on my radar. My goal was I was going to do 20 years in the Army. I was going to be a lieutenant colonel, battalion commander, maybe a brigade commander, and I was going to, just be a brave Army who was soldier forever. And then I'd go, work in the government after I retired from the Army. What a nightmare. That was my belief. So at the time, I didn't really think that it would be harmful or deleterious to put all of my investable dollars in tax advantage accounts. And over the next decade, from age 22 to age 32, I kept doing it over and over and over again. I focused on maxing my tax advantage accounts. And then if I had any spare money left over, then I would throw it into my taxable investments, okay? And then I got the bug of self-employment. I got addicted. I realized, you know what? I don't want to work a W-2 job. I don't want to be a slave to some corporation for my entire freaking life. Life has to be better than just going to a 9-to-5 every freaking work day from age 22 to age 60. Something has got to give. I can't do this. I can't work a corporate job forever. And so I've been, at least up to now, focusing on taxable accounts. But unfortunately, more than half of my wealth is locked away in the thrift savings plan and the Roth IRA and, previous 401ks, because I made a huge error in not really strategically thinking about whether I would need money in the near term. So my advice to you is, if you want to be self-employed, you have to have taxable investments. You have to have money in treasuries. You have to have liquid funds to be able to finance the periods of unprofitability in your business, or periods where you're not making enough money to be able to survive. And if you just continually shovel money into your tax advantage accounts, you've locked it away until you're 59 and a half. And it's a way to actually trap you. It's a way to trap. It's not as bad as a pension, but it still is bad in some aspects. So I highly encourage you. So when you set your plan and you want to be an entrepreneur and you want to potentially quit your full-time job, you need to stay away from the 401k like it's a toxic bomb. And then when you start your own business and you actually start making huge profits and you can sustain yourself without any other W-2 income, at that point you can start maxing tax advantage accounts again. And you actually have more capability to put more money in and catch up as a self-employed person, because you are the employee and the employer of your own business, than a regular W-2 employee does. So I in all honesty, wish I could have access to my capital. Like I looked at my TSP, right? And it has like $220,000 in it, right? Oh, I've got 220 grand in my military and NASA 401k. Well, guess what? I actually have $0 because I can't take it out. It's stuck. I'm 35. I can't take it out till I'm 59 and a half. I mean, I could take it out, but I would get freaking penalized and pay huge taxes. So no, I don't have $220,000. I will have $220,000 in my thrift savings plan when I'm 59 and a half. Until then, I am completely and utterly cooked. So now I'm trying to scramble and put as much money into taxable accounts as I can, and it kind of sucks, okay? Now, I've got taxable investments, but it's not enough to like really have a fortress balance sheet to become self-employed. So I'm every single paycheck, every spare dime I'm getting now, I'm funneling into treasuries. And it's frustrating because I could have definitely stopped work a lot earlier had I been a little bit more strategic about what my plan was, instead of saying, okay, on January 1st, 2026, I'm going to put my two-week notice and become fully self-employed. And I have like 9 months to prepare for that. You know, I could have been preparing years ago. So avoid the trap of the tax advantage account if you want to be self-employed. If you actually are legitimately happy at your employer, which I doubt most of you are, and you just want to stay there because it's comfortable and warm and cozy and there's no risk and you get that fat, beautiful check, and you plan to work there till you're 59 and a half, yes, max it all out. Max all your tax advantage accounts out, okay? But if you want to be self-employed and you're thinking of the next couple of years that you're going to quit your job, do not put money into your 401k or IRA, because you're going to trap that money away and, you're going to be cooked. Anyway, what do you think? Do you think I'm a clown for, maxing my tax advantage accounts? Do you think I set myself up for failure? Or do you think I'm a genius? Like, subscribe, check out the pinned comment. I offer a variety of services: tax preparation, bookkeeping, sponsored videos, $50 a pop, one-on-one consulting, and I have a book, Stop Being a Broke Loser, on Amazon. I'm a CPA. I'm a freaking genius. I can improve your life financially. Have a wonderful, delicious day.